recording is on. Let's mark this ES PD array as well. Beautiful. Golden zone. By golden zone, what I mean is basically the upper fair value gap to manipulation level. And this is our accumulation fair value gap. So price should be really accumulating within that fair value gap. That means we might see choppy price action for a while. Let's go on the 1 minute chart and see what's going on there. Yeah, so far their ES and Nasdaq, they're in alignment. So we don't see divergence in between assets as of now, neither bullish nor bearish. We have a 1 minute order block here within the manipulation zone. I'm gonna annotate that because that should be sensitive on ES. And on Nasdaq, we have this little 1 minute fair value gap, and I want to see how it reacts, how price reacts to that level. I really don't want to see these highs getting targeted. This one on Nasdaq and this one here on ES, just because we have order blocks there. I want to see price trading below it. Let me draw in ES dealing range and Q dealing range from high to low. Beautiful. Launch was a clean delivery though. So we got that SMT at highs. This is Nasdaq's this is ES fair value gap. Nasdaq failed to get above. It rejected right at this level, which is the rejection block, right? Gave an SMT divergence at the high. Then the bullish fair value gap collapsed before I closed the stream. We had a BPR here displaced lower. That BPR was utilized as a lower sell entry. And once we broke away from this little consolidation here, just like that, energetically, we created another fair value gap. This fair value gap was the manipulation fair value gap because we have multiple there. So this is the higher fair value gap, acted as an IFED. Manipulation, the lower one was a short-term accumulation. Then it delivered, completed the market maker sell model there. Alright, now we are in the golden zone. ES trading into 1 minute order block. Nasdaq is at the fair value gap. Let's see what's gonna happen here. Now, one thing, unless we get a SMT divergence at these levels, there's no reason for us to go short, right? We have multiple fair value gaps here, so what I would expect from this price action is two things can really happen here. Either Nasdaq starts consolidating here a little bit, prints like 5 candles or so, right? Then collapses. The first couple fair value gaps here, traps the longs, and then break below, or it'll use one of those fair value gaps, unless it consolidates here a little bit, comes down, uses those fair value gaps, one of them, expands higher, might get an SMT at highs, and that will be our trigger for going short. Right now, though, as you can see, this is our dealing range EQ, right about this level. So I'm expecting, like, I'm not interested in either longs or shorts at the moment because this could just like chop around this level. So for the most part, you'll like to see SMT at key areas. Yes. Not just at a random level. There's a general rule of thumb for that when it comes to market maker models, which I'm going to teach, which I'll cover that in depth in a market maker model lecture. The general rule of thumb is basically 15-minute PD array, right? You have a 15-minute PD array. What you'll need to see is smart money reversal at that 15-minute PD array on 1-minute chart. So I want to see smart money reversal with SMT divergence at that 15-minute PD array, which we had during lunch hour here, right? 15-minute PD array, a fair value gap. We got that SMT, that's our smart money reversal. So it initiated the market maker sell model on the 1 minute. That's a beautiful reaction from this fair value gap so far. Bearish SMT formed on 1 minute. Check ES 1 minute chart, 11:58 candle. Let's take a look. 11:58 candle right there. Oh, you mean here? But the thing is, I mentioned this before. When it comes to market maker models, if your draw is in alignment with the higher time frame order flow, in this case bearish order flow, the algo is not going to stop until that draw is taken out. So in this case, in this scenario, we had a 1 minute market maker model, sell model, right? Draw was the sell side, so it didn't stop until it gets there. I hope that makes sense. And this is a strong reaction. Damn, wow. Didn't even trap longs there. I would have expected like maybe like 3 candles within this fair value gap, then collapses like this. We go back on ES. I don't think we have an SMT divergences on the 30-second chart. Yeah, we don't. Alright, that's fine. No need for FOMO. Let me annotate the sell side here. Could just sweep that sell side. And that could be it for today. I don't think we'll be expanding lower as much. We're definitely not getting the 1 hour market maker model, sell model draw on liquidity today, that's for sure, because it means we're already down 250 points on NASDAQ. That means it has to expand lower another 250 handles, which is, not likely. Now let's take a look at this BPR and see if it gets a reaction there. If it reacts to this area. What I meant was NQ swept the swing high that formed at 158. 158, right, this one. But ES did not. Oh, I see what you're saying. Oh, I see what you're saying. Okay. I see what you're saying. You're right. Here is a little SMT divergence. That's what you mean. Great point. I didn't notice that. Would a BPR short be good here? Um, it should be, yes. However, the stop will be too large. You know what I mean? Because this fair value gap, this CB, is almost 20 handles. So if you were to short here, your stop loss should be at least above that BPR. Actually, 15 handles is not too bad. What I would preferably do is I would preferably use the CEO of that BPR so you can have a, you know, better stop loss. Let me check the 15-minute here. 5-minute, 15-minute, 5-minute. What's up? Did you say something? No. Why? I mean, I'm doing the live stream. Oh, okay. We'll probably switch there tomorrow. I think that will be more convenient for people to do so. Was it also not a BPR of 5-minute? Yeah, thanks, buddy. I hope that'll solve the problem with the voice channel. Was that also not a PPR on the 5-minute? Let's take a look at that level. Here, yes, it is. I really want to see something like CE, a sharp reaction, sharp turn to south side. Sweep there one more time, that rally. Something like this. Take a look at the 4-hour. It's about to close. Hourly chart. Okay. Let's mark this as BPR. I want to see ES ripping through this fair value gap. It shouldn't really violate this high here because that's essentially our order block. I want to see the next candle or the following candle just going lower with energy. So either this candle or the following candle should just displace lower. Which one? Oh, here? This one? Oh, let me see, 1 second. I need to check it on the 1 minute. I mean, yes, looking at 1 minute, it shouldn't really trade into that level if draw on liquidity is sell side. So either with this candle or the next one should displace lower. Because essentially I want to see price to respect this order block. Because it printed an up close candle here and displaced lower, right? It confirmed the order block. Now anything above it should be breakaway. Same deal on Nasdaq, so I don't want to see the CE anymore. See, it's spending too much time in this fair value gap, which is usually not a good sign. It should really like go down right away. Once it trades into this CB, it should really just break lower. And it's fucking around too much here. May I ask this Disney? Sure, I'll take a look. I think I gotta, yeah. I'll do that at the end of the session, how about that? Because I gotta log out from my TradeAway account. Same deal here, order block. It's basically like, right now it's now or never kind of situation. Let me check if it's reacting to this level. Sometimes price just uses old sell side liquidity or buy side liquidity as a support and resistance level. Here, yes, sell side. Yeah, too much fucking around. Now this price action to me, it tells me like it's a 50-50 for me. Breaking lower and violating this fair value gap is 50%, or going above and filling these quote unquote supposedly breakaway gaps, trading into there is also 50% to me. The one with the fair value gap is violated. Let me annotate the mean threshold. also violated. It seems like, Fabio, we can get up to that 5 minute fair value gap now. Let's see. Okay. Yep, now the order block is violated. Let's see if we have an SMT divergence. I don't think we have SMT at the lows. Maybe YM. Yeah, no. I can delete this now. You see now the BPR is violated. The chances of going lower is very slim at the moment. I wouldn't want to be in a short sell in this environment. Let's see the bigger picture here. I'm thinking like a little SMT with YM. I'm thinking like if this is the beginning of a buy model on the 1 minute chart, I would like to see these highs acting as a target, as a strong liquidity on Nasdaq. But like there's nothing actionable here. I would rather wait for a much more meaningful smart money reversal sign. What's going on there? Well, let's see if this BPR can support the price for the upside, for the buy side. Pull back to ES. I'm gonna get rid of this accumulation fair value again, so it'll look more cleaner. This kind of looks like a pullback to me, like from this low to this high. This whole move was just a pullback into discount, sweep the lows, and now the market sentiment has changed. It is drawn into this buy side original consolidation on the 1 minute. But again, we don't have bullish SMT with ES or like a much more meaningful SMT with YM. What's the 10 handles there? This area looks like a trap. Let me change the color. Oh, there's an order block here, which should support the price. What made you stay out in the short trade after the SMT in the golden zone and BPRs to the sell side? So initially I did not see this SMT divergence at the highs. Lost in my mind. Just pointed that out. That's the first reason. And second reason, this price move was too fast for me to catch. You know, I wasn't. I would never. I mean, I wouldn't be able to get in a short position in this leg. And then down here, since we are in a discount already, there's no reason for me to short this BPR. It was just like the risk wasn't there. You know, it wasn't worth the risk. Because if you think about the daily look, we're already in a discount, right? What are the chances of this violating the low and keep going lower? We're already down 250, 220 handles on the day. Now what I want to see is I want to see this order block acting as a support for price to get drawn into the buy side. I don't want to see the low of that order block getting violated. Interesting night. Still need to manage emotions. Yeah, that's the main thing about trading, right? The most important part of trading is one, emotional management, right? Second thing is risk management. Once you have those things dialed down, technical analysis is basically like nothing. You can learn it, right? Over time, you'll get better. But it's really hard to build that emotional strength and that risk management. If you're bad with emotional, if you're bad with your mentals, you'll usually end up over leveraging your next trade after hitting a stop loss, and it's gonna burn your account. By the way, thanks for opening the spot. You're welcome, man. I was getting a lot of DMs, and I was like, okay, why shouldn't I just open 20 more so people can get in? But this is the last time I am opening for at least for a while. I want to focus on a small group, a handful of people in the first place. And guys, also, if you haven't joined the giveaway, we have a giveaway right now. We are giving away my final features 50K starter plan. We'll be drawing the winner in like 5-6 hours. Make sure to join that. Yep. That's ugly. It's because also like no SMT present at the moment for a bullish move. So technically speaking, the buy model hasn't initiated yet. Once the SMT is there, then I would look for this buy side act as a draw on liquidity. Maybe what we'll get is Nasdaq might just turtle soup this low and then rally. Let's see if that's the case. It didn't have a reason to go up there though. That's what I'm thinking. Like it should have just stopped at the break BPR if it's really bearish. So I'm not expecting this price to come back down into this range here. I'm just expecting this turtle soup being a turtle soup, running the highs all the way up to this drawn liquidity. And now we have a 1 minute SMT divergence. Hasn't confirmed it yet, just because, yeah, that's what I'm thinking. And that's my internal dialogue basically at the moment. Absolutely. Once this VPR failed, it's gone. In fact, let me just delete all these because they're now irrelevant. This is also irrelevant. We have a range EQ here. Yeah, that's what I'm saying. Like that's how I anticipated the turtle soup. I looked at ES. ES looking stronger than Nasdaq. The likelihood of Nasdaq rating that low and rallying higher is, you know, it's more likely. Yeah, let's see. It's almost silver bullet also in the afternoon session. 8 minutes. Also delivering from bullish 5 minute fair value gap. Let's take a look. Oh yeah, the inversion fair value gap. Actually, that's a BPR. That's a low risk buy on the 5 minute. But again, I would have loved to see an SMT divergence at the lows and a much more meaningful structure shift on the 5 minute for me to consider that. Now we are trading into that fair value gap. I'm really expecting this to hold the price. It shouldn't really go to the lower portion of this fair value gap if it wants to rally. If PA now gives a clear market structure shift, would you enter targeting origin consolidation, or would you wait for silver bullet time? I would enter, just because today is the macro that you want to trade outside of silver bullet primarily. No, they should send it, honestly. Should, the buy side needs to act as a draw on liquidity. What's the risk there? 10 handles. I'm gonna go long here. Let's do it. I'm going long there. Stop loss at 12.5 handles. My risk is 250 bucks one contract. So I'm using hard stop loss there. 50 ticks. Oh, actually, that's a wrong stop. 1 second. Let me adjust that. 12.50 is right about there. 503.25. So I'm not concerned about the PD raise there. I'm just using a hard risk. 250 bucks worth of risk and targeting this high right there. See what happens. I'm gonna put my stop loss at break even if we can get above the range equilibrium. Can we mute those people? How do we take access from, like, how do we take the permissions from people to use soundboard? Now this, what happens here is this low, because it's a turtle soup, really shouldn't be traded into. So now if I put my stop loss below that low or at that low, it should be safe if I'm correct with the drawn liquidity. So stops should be safe right about that level. Now we are at EQ, so I'm about to put my stop loss at break even. Once it trades above it, I'm expecting ES catching up and taking the high as well. Once this candle closes, I'm putting my stop loss at break even. Alright, thank you, buddy. That is not a reaction I would like to see, but you know, it's what it is. I want to see the next candle rallying right away. So I'm gonna break even here. Let's see how that goes. Just because the first thing I want to see here, once we trade into the range EQ, I don't want to see Nasdaq stalling here. I want to see ripping this buy side right away, right? That would have been my first target take partial if I was 2 contracts in, and then I want to see a continuation. It doesn't have a reason to come back down here if I'm correct with the drawn liquidity. And what I'm anticipating right now is market maker buy model in the 1 minute. You know, it's stalling. Like this candle should rip through right away. I don't like to see it stalling. There you go. Now, if I get stopped after this high is taken, that's fine. I'm fine with that. Now, if I was in 2 contracts or more, this would have been my first partial. So I'm gonna annotate that for you guys. Buy side TP, and my stop would have been obviously at the break even. At break even. Now I want to see ES catching up. Otherwise, it's no good for the buy model. I'm guessing that first high would be partial take if you had multiple. Exactly. That would have been your first partial, right? You would probably take 1 contract off, 2 contracts off, half off, whatever, and you would write the rest. Now, if I don't get stopped at break even here, I'm going to show you how I'll manage my stop loss and full pulling this 1 contract all the way up to the drawn liquidity. Now I want to see ES catching up. Once ES catches up Nasdaq, I'm going to close ES chart, and I'm going to pull up 15-minute and 5-minute Nasdaq, and I'm going to manage my stop loss accordingly. Now this candle should really rally here. Once it does that, or if it does so, this is going to be a confirmed order block, right? Now I can put my stop loss below that low, which should be safe. But I want to see it confirm that as an order block first. And now we are in silver bullet hour. Let's see how it goes. This is not an order block just yet. It's not validated as of now. Now, if this candle closes like that, now we have an order block there. But it has to close first. Wouldn't second partial be 17,555 since that's another high? Let me check it out. Now ES caught up. We don't have an SMT there. That's good. You mean here? Yeah, you can take partials there. There's nothing wrong with that, but it's basically because I'm rather more seasoned, I would say. I don't mind holding this position all the way up to the draw on liquidity. So the original consolidation. So the actual draw should be this high rather than this, if that makes sense. But there's nothing wrong with taking partials here. I don't like that reaction so far, but you know, it's what it is. If 11 a.m. high and low has not been taken by 2 p.m. and we have begun the buy model, 11 liquidity is usually a huge draw. Correct. Now we're testing the EQ one more time. I don't want to see price like fucking around at this level. I want to see it like rejecting that level, sharply turns and goes higher. Now we are in the silver bullet time window, right? So that means an hourly candle and a 4 hourly candle has just opened. I would see this move as a manipulation on those candles, and if I'm correct with the draw, that would be the catalyst for the longs. I think 11:54 a.m. fair value gap has been causing the resistance. Once we invert, we should push 11:40, 54, 54 right there. Yeah, yeah. It's also because we are at the range equilibrium right now. So at range equilibrium, you would expect consolidations like that. And that's why I like to be mindful or be aware of those levels, because when I see price action going back and forth just like this, I'm not too concerned because I know that's normal, you know? Even if we get stopped, I'm looking at 236 to 39 candles to re-enter. Yeah. I mean, if I get stopped, I'm not going to re-enter because, it's what it is. I'll take the break even and move on. So that fair value gap should be our silver bullet fair value gap here. And we also have this little tiny fair value gap lower, both in discount. I expect them to be respected. I don't like the reaction at the high though. I want to see a sharp move higher and candle close above it. Let's zoom in. 1403. Now, if this fair value gap fails, that means I'm wrong anyways. So that's why I don't mind getting stopped here. This should be the 1 minute golden zone, meaning IFED. There you go. Let's see what happens here. I'm going 5 minute. We have an order block there, right there. That could act as a support on the 15 minute. Pretty much nothing on the 15 actually. On the 6, on the 1 hour chart. Yep. On the intermediate time frames, there's pretty much nothing at the moment. Like on the 15 minute and above, it's just waiting to make those swing levels, swing points. So we have this order block there. Let me annotate that. Oops. Obviously, depending on price. Yeah. I'm still seeing this as a pullback, though. I'm still thinking the draw on liquidity will be this buy side here, until proven otherwise. Yes, printed equal lows there. So this low, the order block low, as long as this is not violated, the sentiment in the market short term is upside. That's right. All right, cool. Now we are testing the range equilibrium one more time. I would really love to see it moving energetically higher right now. Equal lows there. No, it's not. It's a little bit of SMT divergence there. So that retest below the range EQ is a long for me. I mean, I'm not executing it on it, but that's a long idea for me, long trigger. It's on 5 minute again. Yeah, so the next 5 minute candle, when it opens, I want to see it trading above this previous high once it opens. Okay, that's it. I'm thinking like we might get a much more meaningful SMT on the 1 minute, just looking at ES. ES is kind of weaker right now comparing to NASDAQ and left equal lows, right? ES can turtle soup that equal lows, and that might be the catalyst for the buy side draw on liquidity. But in that case, I don't want to see NASDAQ taken out to this, specifically this low. I want to see it staying above it. So that to me, retest of this fair value gap here. That's a long for me. Check 15 minute. Yeah, some ugly wick on the 15. And the fact that price respecting the EQ from above with the bodies, it's just a great sign for the longs in my opinion. Now the 5 minute is open now. What I want to see is not this candle, but the next candle should really rip through it. This old 5 minute high, this high. It's basically now or never. So this is the manipulation on the 5 minute. This candle, and the next candle maybe touches one more time to the EQ or to this fair value gap. And rallies. That's what I want to see on the next candle, something like that. And once it breaks above it, I want to see print like market printing up close candles all the way to the draw on liquidity. So after this high, it should really be a low resistance liquidity run. Fabio, can you hear me? Okay. Someone asked if anyone can hear Tor. Okay, so this is the candle I want to see. So it touched the range EQ. Now this is the candle I want to see an expansion higher. It is now or never for Nasdaq. Forecast. So this is what I want to see. Oh, not forecast actually. Ghost feed, I think. Yeah. So once it breaks out of this 5 minute high, I basically want to see like consecutive up close candles all the way to the draw, just like that, energetically. Yeah, where is that thing though? I thought it was. Oh, here. Oh, there you go. Yeah. So once it breaks out of there, this is what I want to see. Energetically drawn into the buy side liquidity to complete the 1 minute buy maker, market maker buy model. Oh, rejection block there. There's literally nothing executionable here. It's chopping. Oh, let me annotate this actually. Now that we have the SMT right there, now I don't want to see this low getting violated. Okay, new 15-minute candle opened. Let's see what happens here. Go on the 15-minute. There's basically nothing much on the 15. Maybe the CE of that wick tail should be sensitive this level, but shouldn't really violate there. Just draw this in time. let's see what Nasdaq does here because ES took the equal lows. Now that's gone. Yeah, the buy idea right now doesn't look as good because it shouldn't really come back down here and violated that low. Didn't have a reason to do so. Delete that. I'll delete those things too. Just make it cleaner. All right. The fact that Nasdaq came down all the way to this low is it's not good because this low was supposed to be secured. It was supposed to be safe. So now that if draw is still correct, so if algo wants that draw buy side draw liquidity, now it's the market is weaker now for the buy side targets. It's not as strong as I would like it to be. I'll delete this. All right. Look at this short-term range here. Yes. This fair value gap here, the bearish one, is not a point of interest for me. I'm not really interested in going short in there. I might use it as a inversion fair value gap maybe. Sorry guys. This SMT doesn't change your idea to target the trap short? No, it does not. Because once I know that there is trap shorts, market doesn't really have a reason to get back down there. That's why I'm annotating that area. It has to complete the buy model first because it already initiated the buy model. Let's take a look at the risk there. 56, 60 handle. I hope you guys understood why this fair value gap was not a short point of interest for me. That's just because I know the draw will be buy side liquidity. That's how you avoid the wrong side of the market, the wrong side of the PD arrays. You gotta know the draw first. You gotta know the narrative. The only thing I don't like about this price action is basically Nasdaq taking this low out before rallying. That's the only thing I don't like about this price action at the moment. I would rather have Nasdaq making it higher low there, just like that, from this to something like this, and then rallies. That's what I would have preferred to see. What's up? Okay. Let me annotate this fair value gap here. What's the risk there though? 48 handles, not too bad. I'm gonna go long here since we are in EQ again. 12 handles, 12 handles stop loss. This is my second attempt for this draw here. Let me put that. Oh, that's ugly. Wait, am I 12.5%? Oh, hold on. Wrong stop loss placement. 12.5 is what about here? No, not good. So one break even, one loss. I'm not gonna be looking for a third trade because that's my rule. Basically, what I do is I either get one win and I stop trading, or I get two losses and stop trading for the day. Right now, since I traded two times, one break even, one loss, I'm not going to be actively looking for an execution for another time today. I'm waiting till 236, 239, 3-minute candles. Yeah. Let me check the intermediate time frames real quick. Yeah, I mean 5 minutes barcoding right now. There's nothing much going on the intermediate time frames. Same thing with 15 minutes. Like these are the low probability conditions. And on the 60-minute. Yep. Let me check what candles are you referring to. Okay. We're just chopping around the equilibrium right now. These are the conditions where you would like to avoid trading, basically. EQ, going back and forth, back and forth, back and forth. Like this is the seek and destroy model. A seek and destroy profile at range equilibrium. I'm still thinking the drawn liquidity is this buy side here. But now, since we are just creating this seek and destroy profile at range EQ, what's more important here is the timing of the entry. So you gotta be perfect with the timing. Otherwise, just like you saw, you'll get stopped out. Thinking NQ soups 230. So you think NQ will turtle soup at 230 these lows here? Yeah, that's what you're thinking. I think, I mean, I don't think there is a reason for NQ to go low, go there. I think this these fair value gaps should really hold because we already pulled back into range equilibrium on the short-term dealing range. Then we expanded from that level, right? We have multiple fair value gaps there. Because of that, these fair value gaps should really hold the price for the buy side target. I think we go seek and destroy and we chopping. Yeah. What usually happens with seek and destroy profiles is basically like, so these are the buy stops, right? Then we have the sell stops here. First, hold on, not there, right here, right buy stops. It raids the sell stops first, then goes for the buy stops, right? When that happens, it usually goes in the direction of the second move. So it seeks the sell stops first, secondly buy stops, and then goes in that direction. And we have the backstory backing that up in this framework as well. We have a buy side draw here. Here there was a consolidation, the higher probability to draw on liquidity right now. So that's backing it up. The seek and destroy profile. I wouldn't really like if Nasdaq comes back down to EQ one more time. I really wouldn't like that. At this point, because this fair value gap is respected, and now the fact that we are trading above it, it should really start expanding with energy to the buy side. A 5 minute candle close in 50 seconds. With that candle close, I want to see like 2 or 3 5 minute candles being drawn into the buy side. I gotta fix my. I don't know why this is 35. Should be 50. Now 5 minute candle close. Now I want to see expansion higher. Like within the next 5 to 10 minutes, it should be. It should tag this buy side liquidity, draw on liquidity. We have a little SMT here, I think, yeah. While we are waiting for this, I'm gonna grab water real quick. I am back. What happened here? Hold on, this was supposed to be here. Okay. Range EQ, I'm gonna draw that in time. Let's do that. I mean, looking at the 5 minute chart though, it really looks choppy, too much back and forth action, barcoding basically. These are the conditions that you don't want to be in a position, you know what I mean? Like, because like even if you're right with the draw on liquidity on the lower time frame, you'll get chopped like this. Just like how I got stopped, you know. S&T both sides, stay out probably. Yep, that's the smarter thing to do. I want to see that level on the hourly. I think that's the CE of the hourly wick, more or less. Yep. I think the chances are, when I'm looking at ES and NASDAQ side to side. So this is the drawn liquidity on NASDAQ, right? This high here. And ES has a breakaway gap, right? What I would like to see is this breakaway gap act as a drawn liquidity on ES, right? And gives a S&T divergence here with NASDAQ, something like that. Here, this high, something like that. That's what I'm anticipating. Because that is essentially an S&T divergence on an intermediate time frame. I'm in 239 candle. Where's 239? 239, this one. Yeah, that's a propulsion block. a 30-second. Now we have a 30-second order block there. Should be respected. $50-minute candle close in a minute. Should really send it higher. Just be mindful of this level there. The 5-minute. So if you're in a trade, I would put my stop loss at break even at that point. Shouldn't violate yeah, it shouldn't violate this low. Shouldn't come back down into range EQ anymore. It already accumulated here, consolidated. Now it's the time to make the rally. Just like it's that there's an internal breaker there, right about here. That should be respected because we have a low, high, lower, low, higher, high. It shouldn't really trade below it. It could wick, but I don't want to see a body candle close outside of this area. I can delete this. I rated this high. It's not so significant for me. It shouldn't really reverse from here. So what I want to see is, I don't want to see price stalling here. I want to see this fair value gap being violated within the next 2 minutes, 2 to 3 minutes with the energy. just like that. Now it has the candle close outside, and then it should go ready to go. $9.30 juicy as hell. Let's see. On Nasdaq 9.30. I don't think we're gonna get there today because the overall drawn liquidity is still lower. So when it comes to that 9.30 liquidity, so these highs here, what I would like to see is the fair value gap on the 15-minute here being respected. Then later on, using that fair value gap to go lower into, Jesus, into the actual drawn liquidity, which is this level. Oh my God, this level right there, daily sell side. I want to see that acting as a drawn liquidity. So I would rather target that 9.30 high from today after the sell side is purged, personally. Let's check ES on the hourly. I think we're gonna have an SMT there. Probably like above this high, you might get an SMT divergence with ES. We'll see. Just like that, this is what I like to see when it comes to old fair value gaps. Like this is an old fair value gap. When price trades into that old fair value gap, that area is irrelevant for me. And in fact, what I would like to see is energy disrespecting that area and moving away from it within 1-2 candles, just like here, as you can see. We can delete this and that. We have the buy side there. Buy side is probably not going to get tagged. I mean, thanks, Thor. You're welcome, dude. I'm glad to see you guys printing today. $1,000 on the day. Beautiful. We have a tiny fair value gap here. Just want to annotate that. Yeah, sure. What's up? Hmm. Yeah. So you're talking about the London Fair Valley Gap? Hmm. Yeah. I mean, today is yeah, yeah. I understand what you're saying. Today's the day where you should be focusing on outside Silver Bullet, just because the delivery was before Silver Bullet in the morning session, right? That means the likelihood of Silver Bullet being volatile is less now. Same thing with the afternoon session, right? But if morning session was just like going back and forth and setting up for the 10 a.m. Silver Bullet, then your focus should be trading the Silver Bullet in the afternoon session or in the morning session, right? So here, as you can see, like this is the open price, delivers the sell side before 10 a.m. Then 10 a.m. to 11, here's 11. It's kind of like back and forth, high resistance liquidity run. That set the stage for the launch macro, right? The outside of Silver Bullet after 11 a.m. was much cleaner in terms of price action. This delivery was much faster, right? And the same thing here. The focus in the afternoon session should be either the last hour of the trading session, 3 to 4, or before 2 p.m. Because as you can see, this is the silver bullet time area, right? 2 p.m. right about here. We're still in it. It's like too much back and forth action, right? Consolidating so you can destroy profile, and preferably you guys need to avoid these kind of price action. And the way I internalized it or anticipate this is basically looking at the morning session's delivery, whether it delivered before 10 a.m. or not. If it does so, this is what you'll see. Yeah, yep, yep, exactly, exactly, exactly. What I personally like to do is in the first 30 minutes of the trading session, New York session, I like to just like um, anticipate a direction for the 10 a.m. Right? I have like 30-minute window to decide or to determine which direction I want to be trading in for the day, right? That is why what I like the most about Silver Bullet. So I'm not concerned about this price action at 9:30 to 10 a.m., right? That's another approach, though. I'm fine, man. I yeah, I'll take a look at it after today's session when I wrap this up. I'll take a look all of those charts. I saw a couple yesterday. Pretty much they were looking fire. You guys are killing it right now. And the more you do those exercises, the better you'll get. Like you're training your eyes, right? And that's very important because when it comes to live trading, we're yeah, because when it comes to live trading, we are mostly operating on 1 minute chart, right? You got to be able to think fast and quick, and you got to see those PD arrays rather quickly. And the more you do it, the better it'll get, you know. And thanks for asking. I'm doing great. I had my coffee already. I'm a happy guy right now. Yeah, exactly, exactly, exactly. Mhm. Exactly like as long as you're following your risk management rules, there's no reason for you to be concerned about your stop loss, right? Like I got stopped in this price action. My risk was $250. I don't care, you know, because I know that tomorrow I'll be able to make I don't know like $2,000 in the account with the same amount of risk, you know. I know tomorrow's price action will be better, and I can find and you know a better entry or a better price, whatever the case is. You know what I mean? And when it comes to those kind of things, usually people are emotional about, they get emotional about their stop losses. And that's because they're over leveraging, right? When they enter, like the first thing you saw me doing, for example, here, I checked where my stop loss would be if I were to use 12.50 handle stop loss, right? That's what I checked. And when I see like that's okay, permissible, the price shouldn't go there, so I can enter, right? I executed it. The first thing I checked was my risk, and then my reward. Is it worth to take the risk or not? You know what I mean? Because like like for example here, I know the draw is here. I know it's gonna get there, right? But if I enter from here to there, it's just 15 handles, right? The risk to reward is one. It's pointless to long here for me, right? It's not a it's a waste of my time, my mental, whatever you call it, right? Those are the first things you gotta be dialed in. Once you have them down, then the third thing that comes is the technical analysis part of the things. And mostly people don't have problem with that. The problem is emotional and the risk management aspect of trading and patience. Exactly. Hmm. Exactly. In fact, that's how you should start anyways. You don't need to trade minis to make money, you know. You can literally make $1,000 trading just micros. Hmm. 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 Exactly. Exactly. And you'll also learn how to pyramid or scale into a position and hold your position, which are essential things, you know, when it comes to trading. You got to know those things. And if you're getting emotional trading minis, you're not going to be able to learn those things while you're in a trade because you got to be calm to be able to see things in the pyramid and stuff like that. Yep, yep. Hold on 1 second. Can you explain the giveaway and how we enter? So, okay, I'm gonna tag the channel here. There's a channel called VIP giveaways. You basically need to go into that channel and click enter. That's basically it. Hold on, I can't tag the channel. I want to tag it. Sure. Let me tag the channel in. Hold on. What is going on? I can't tag the channel. All right. So you can simply go in this channel, click, what is it? Enter giveaway, and that's it. That's all you need to do. Also, like Fabio just mentioned, make sure to have an account with My Found Features, and you'll see instructions for that right about here. Coffee Messenger. There you go. Fabio, that question is to you.